Hi guys, welcome to SavvyMoneyShow. Me, your host Sean. Well, our last couple of videos we mentioned Clean Spark, which has gone up 12%, and Riot, which has gone up 15%. I didn't get those percentages. I got a 11% and 13%, but if you bought when the video came out, that's what you would have got. And Solid Power, which we called when it was $8.78, so you got just under $2 a share if you bought and then you sold at $10.40, which is what I did, keeping my profit in 3 shares. Now let's move on to this week's shares, shall we? Sana Bio. It's a biotech company which is all-time highs of $45 a share, and I think it's one that's of the CRISPR family and will do well. If I could hold any company, it will be that. We have also talked about Caribou, and it went up a little bit. It went up about $1, but it's not really worth talking about for $1. ABCL, I've talked about it before. Yeah, I'm adding more. As you can see, it's $55 stock. It was a $55 stock. It did actually hit 70 at one point, and it's now all the way down to $14.75. Now it has a PE of 22. I have a whole video on it where it's partnered with Pfizer, it's Moderna, Lilly, GlaxoSmithKline, and it has an artificial intelligence platform. And I think you guys might want to check that out. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use if you deposit a small amount. Now we're looking at Penn, one of the worst performers in the S&P 500. It's down 40% this year, though it's still up 71% from January 2020. It's trading for just 22 times earnings and 1.5 times sales. It's extremely low for a company booking 33% sales growth annually. Penn has stronger US focus in gambling compared to some of the China-centric casinos, and should see long-term growth. Remember, at the moment, Chinese gambling stocks are the reason gambling stocks have been hit because of all the gambling, all the Chinese restrictions. Now, its market cap is less than half its enterprise value, and you can see how its forward PE is at 18, and it's come down again, so now P is at 19. Its price to sales is 1.5, as I said. Now this book is price to book is under 3. I like the fact it doesn't have to spend on its marketing budget, which goes straight to its margin. A lot of people who are investing in this, I think, gone into SEAH recently. It's had a lot of bad news, but I think it will overcome it, and I think it's one to have on your radar. Activision Blizzard suffered along with the rest of the gaming stocks, as well as having company specific issues, and has fallen 30% this year. Shares are now just 10% above where they opened 2020 before the pandemic. Weakness could continue into 2022, but shares now trade for just 17 times on a price to earnings basis. And the company has a very strong balance sheet with more than 10 billion in cash. When you consider it's wiped off $1 billion of its debt this year, and it could at any point pay off the remaining liabilities and still have enough cash for 1 year runway if it never brought in any money, which of course it will do because it has some amazing games in its portfolio and it's constantly bringing out new games. It should be one of the first beneficiaries to grow in the metaverse theme, and now could be a smart time to pick up shares with bad news surrounding it. Some people don't like drama around their stocks, but they provide great buying opportunities. Sorry about that. Remember, it has a forward PE of under 15, and this is one that was looking safe and at home over $100. People were jumping on the bandwagon not that long ago. Costco. Now, it's one that does well whether it's a recovery stock or not. Purely because it makes money on a subscription basis. Now, they've come out and said even with supply issues they'll be fine. Why? Because of all the land they own, and is a company that just, if you look at the chart, look at that, is just a beautiful chart. And a year ago they paid out a special dividend of $10 a share, and it's not even that overvalued. Market cap to enterprise value wise, it has trailing PE of just under 50, forward PE is 46, price to sales of 1.27. I think this is one of those that you buy and you hold. And another one, Walmart. Sorry about that. Now, they're talking about doing drone deliveries soon, and the fact that they've just paid the dividends recently provides a good opportunity. Their market cap is below the enterprise value, forward PE of 21, price to sales of 0.7. This is also one that I reckon supply chain issues haven't affected them. Now, I think this is one that hasn't performed as well as Costco this year, but is due a big performance boost. BKKT Holdings is one of the main shorted stocks. I think someone said the cost to borrow was 140%. If you remember, it was this price before it announced the MasterCard deal, and that shot it into a short squeeze. It was looking a good company then, and look at where it went, $40 a share. We rode that train then, and all it needs is people to start noticing it again, and we can ride it again. It seems to have leveled out here. GGPI, what can I say? Once again, seems to have leveled out, and just accumulating shares, waiting for it to go up. There's so much good news coming out about that, but more recently it's autonomous mobility design that transforms between two modes for urban driving and the open road. Now, you can't tell me that doesn't look like a steampunk person's dream, this car. Now, I do think I did love the post art when it came out, and now you've got this new one that looks like it's some sort of science fiction movie. I mean, I don't know what to say. Now, Geely and Foxconn form partnership to build cars for other automakers. Now, it kind of begs a rumour over the Apple car coming up again. And Geely's the parent maker of Volvo and Polestar, so you will have rumours coming out about that. This is some information about the Apple car. Now, this is all based on patents, so we don't know whether or not it's going to actually look like that, but feel free to use it for anything you want. Remember, as I said, they are just rumours, and you have no idea how it's going to look or who they're going to partner with until actually happens and they come out with it. But anyway, I thought you guys might be interested in. And GTLL Global Technologies, they're to spin off its wholly owned subsidiary MOM, Markets on Main. They haven't brought out any information yet, but once they do, expect it to go. It's they will authorise 500 million shares of common stock and 10 million shares for preferred stock. What's going to happen is the company will retain a 20% interest in MOM, and the rest go to the shareholders as a kind of special dividend. Now, the thing is that, in case you didn't know, we spoke about this before. It ran up and we sold out, not quite there, but just before there, and then it's come back down again and just consolidated. Now, if you was in this before and you bought the run up, gives you the opportunity to buy back in at cheaper the price, if you want to, that is. But anyway, remember to do your own due diligence. The market cap is still underneath the enterprise value, and I'll see you in the next video. If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.